Hi, it's Larry Gaines, and it is Wednesday evening, March the 20th, and this is the Daily Aftermarket Outlook. Well, the Federal Reserve met today, and they pretty much left everything unchanged. The wording was changed a tad bit that, they would assess the market going forward to see how much treasuries and mortgage-backed securities they'd be buying monthly. Currently, they're buying about, on average, $85 billion. So they put that out there. And that was a little bit of uncertainty within, what they're doing. But everything else was left the same. Going forward, interest rates will be low. They're fighting, trying to make easy money to create, jobs and reduce the unemployment rate. So they're still on track for doing that. So the market's pretty much stayed sideways here all day. Did close up a little bit on the Dow right here and closed back above the 8 EMA. We're currently on this trend line. So this thing needs to get going here or else it's going to start rolling over. Our indicators are short on the medium-term time frame, which is the daily, and we're short on the intermediate-term time frame, our system. So if this does not get going here, it could consolidate further, but you're also coming into this trend line. You're on the 8 EMA, so it's showing some cracks here, but holding up. Still the uptrend is intact, but showing a few potential cracks in the old armor. Now here's the S&P futures. It closed higher. You had a higher close, but again, it closed. It opened up below the 8 period moving average, 8 EMA. It's holding this 21, and it's consolidating. It's holding this 25% retracement level from that low back in February 25th to the high, which was made back on the Friday the 15th. So we've got 2 more days in the week. Friday expiration, maybe we'll see a push higher, but the markets, are struggling here. But the not throwing in the towel yet as far as this thing rolling over, because it potentially could still move to the upside. The longer term trend is neutral based on our model, and medium term trend is short, close to going neutral. So we'll see how it goes, but right now it's just kind of holding the 8 EMA. Now the NASDAQ 100 sold off really hard towards the end of the day. It had reached back up towards the highs and then came back down hard right after the market closed, actually, and settled right below the 8 EMA. So our long-term system is model is still up. The short-term model for medium-term, which is the daily, is down still, but it's just big ranges each day, so it's just holding in this 25% retracement, but it's been struggling. Apple and Google were starting to give it some momentum to the upside, and I think that you really need Apple to get going to the upside to get this thing back on track with the NASDAQ going higher. Here's Apple. So Apple broke this trend line here, and it's gotten up to the 50 moving average right in here at the 462 area and pulled back yesterday and today. So it really needs to hold yesterday's low, that 447, and see if it can consolidate, stay over the 21 EMA right here at 444.64, and then it has a chance to break to the upside. Now if Apple can get some momentum breaking to the upside, then this will definitely help the NASDAQ 100, which is weighted heavily with Apple up to about 13%. So here you can see Apple has broken actually 2 trend lines from this pivot high down, so it's hanging right in here. So it really needs to get to this 50 period moving average right there, and then it's got potential to get back up here to this 482, 483 area. So tomorrow and the next day will be very, very key for the markets going forward. Now here's Google. I was looking for Google. It came down, retraced down to the 21 moving average here, broke back, closed above it yesterday on Tuesday, And today it looked like it was going to try to break back above, but kind of ran out of gas here. So it's right into the 382 at 820. It needs to get through there, and then it needs to break, so potentially break this trend line, get back above the 8 EMA, which is also coming in at 816, 817. So we need Google. If you're going to see the NASDAQ move higher, you're going to have to get some movement out of Google to the upside, and also Apple, and have those two show momentum to the upside. If not, I think the NASDAQ looks like it's getting ready to roll over. Now here's Amazon, showing a lot of weakness here. Came down, broke below this, this low 255, closed back up today, but barely held this 100-day moving average. So you can see all the indicators have crossed down. So this is not looking very good for Amazon, which has been a very powerful stock, over the last, since the first of the year. You see Netflix too is just, seems like it's hanging by a thread right here. You've got this pennant formation coming in, and you're in a major squeeze on the daily time frame and the 60-minute time frame. So it's going to break up or down big time based on a volatility squeeze that I'm showing on our system. Just to point out too, also Apple and Google are both in a volatility squeeze on the 60-minute time frame. So they're consolidating sideways, so something's going to pop either to the upside or downside, and I think it's going to have a pretty powerful outcome to the market, especially if it does pop to the downside. Those type of high beta, high cap stocks, if they start moving to the downside, that's probably all it's going to take to tip this market. Now the Russell 2000 held up quite well. You can see it closed back up, above this 8 EMA here. So it's reacting better than the other markets. So it's looking, much better and holding up nicely actually compared to the NASDAQ. Primarily the NASDAQ. And here's the transports. And the transports are just sitting there as well. So now let's take a look at bonds and go through the other relationships or correlations that we've been following here. Now you can see here's the 30-year Treasury. Here are the bonds, and this is the biggest market other than currencies, the bonds. So bonds did slide off today. So with bonds moving down, that's good for equities. So we did have a move down today on bonds, so it was constructive to having the equities hold in. Now bonds are back down to its 21-day moving average, and you can see the 8 EMA was starting to cross up over the 21. So you were starting to get a sustained rally to the upside. Here's a trend line here. So bonds are crucial. If bonds start pushing higher, then that's also a sign that money is flowing out or rotating out of U.S. equities and into bonds for a little bit more potential safe haven. But right now bonds did come off today, and a lot of that was based on the discounting anything that's happening in Cyprus, that nothing major will impact the United States. And here's the euro. Right now you can see it's still weak, still in a downtrend. So as the euro goes down, if it can't sustain into a rally, that's going to push the dollar higher, and that's not very helpful to a strong commodity type market for crude oil or basic materials, and that will hurt some of the equities that are based on base materials and crude oil. So let's take a look at the dollar index to show you that correlation real quick. So here's the dollar, still holding up quite nice, right above that 8 EMA. So it was kind of pretty much an open and close. Well, here's today. It opened up higher, came off, and now it's back up a little bit post-market. So the dollar's holding in there. If the dollar keeps moving higher, that's going to hurt some of the commodity type related stocks, such as crude oil. You can see crude oil is sitting right on this trend line here, right in these moving averages. So it's very choppy, and and it's in a daily squeeze, volatility squeeze, so it's going to break either up or down, and most of this will be based off of what does the US dollar do. So if the dollar rolls over, crude oil will get a little bit of a bid from that. If the dollar keeps pushing higher, that's going to push crude potentially lower. So that's what I'm seeing here. Here's the last thing to look at is gold. And gold was pretty much sideways today. So still holding above the 21-day moving average, still at the 382, and just trading sideways. So I hope this helps, and good luck tomorrow, and I will talk to you after close. So keep an eye on Apple and Google, and those will be, I think, key components, along with whatever the dollar and the bond, U.S. Treasury bonds do as far as direction of this market going forward in the next few days.